We have 5 minutes left till the market is going to open. I am looking at this time frame and I'm expecting some sort of a range. So looking at it from the 4 hours time frame, we got a closing below this point. We got another closing above this bar high, but still this bar was contained within this bar. So this is the first close we have gotten. So that was the validation candle. This is the invalidation candle and validation for the bears. This is an invalidation candle. So overall, I'm expecting some sort of a range and I'm expecting the gaps to close. So if I take this point and and come to the hourly time frame. So on a 4 hours, it is a range. Yesterday, I was looking at and analyzing this hourly time frame. I said this is the range. Now the range has expanded itself into the hourly from the hourly till 4 hours, right? So on the why the price is acting this way? This price is acting this way because we got the inside candle on the previous week. The weekly chart was the inside candle. So it is a broader contracting triangle on the weekly time frame. Inside candle coming to the daily time frame. This is the price. This is the candle which is holding price. So the invalidation on the daily is 402. Coming to the 4 hours, we have already analyzed the 4 hours. Coming back to the 15 minutes, 4 hours and hourly is done. Coming back to the 15 minutes, this candle is the 8:30 candle opening on the 15 minutes. We had some sort of news that market jumped 156 or 160 points. I'm expecting this imbalance to close. This imbalance. For today, we do not have an Asian target, so I'm just expecting gaps to close. Since we are in a trading range, I am more interested in trading this gap, targeting this gap. Okay, this was yesterday's target. If you remember, I was trying to trade this till the yesterday Asian high, and we got 16, 17 points. Because this is a range, so I'm not letting my trades run for longer periods of time or taking swing trades. I'm just expecting some shorter term scalps. We have 2 minutes till the market is going to open. This was the previous day's low. This was yesterday's low. I have to keep this in mind on the regular trading hours. We are bouncing off of why we never got a closing below this point, 572, because of two reasons. This was the low, and we had the hourly EMA right beneath us. So that's why we are bouncing around this point. So I'm keeping an eye on the hourly 20 period moving average through this line, which is 527.04, coming to the 15 minutes. Let's see if we are above. We have 32 seconds left. We are trying to open above the hourly and the 15 minutes 20 EMA. So let's say if we get a closing, for example, if we open above this moving average, I will be watching closely if we get a closing below this moving average on the first candle or not. If we get a closing above, then it's gonna basically shift. But it really doesn't matter in this context because we are in a trading range. This was yesterday's high. We are opening above the 20 period moving average. We have 15 minutes. I have 15 minutes until I'm allowed to trade again. So I'm watching this on a 5 minutes time frame and watching this on a 15 minutes time frame. So now this is the candle or the dealing range. The 8:30 candle is the dealing range. beneath the 50% of that range, we have closed below the weekly open or the NVOG. So that can be used as some sort of a resistance point, and market can come easily down to this low or close the gap 566. Overall, all in all, in the higher time frame context, I'm expecting, obviously, because we are in this channel, this right, we tried to break this channel yesterday. I'm expecting the market to run up higher on the higher time frames, but at this moment we are forming some sort of a range, and that is putting a pause on the trend. Getting supported by the previous week's high. Hello, Eric. How are you doing, brother? If we tested the previous week's high, we are getting support from that point. Overall, even in this trading range, this can be some sort of a wedge in this uptrending channel. I'm watching closely if we are going to get a closing above the weekly open. This line presents, the dotted line presents this WO presents the weekly open or the NVOG. We got support from the previous week's high. Let's say if we get a closing above the previous or this week's open or the previous week's close, if that happens, then I can basically trade with the trend and hope that or take a chance that this range is going to break towards the upside, as I'm already biased on the higher time frame towards the upside. I am good, Eric. I'm good. Eric, have you started trading? I thought you told me that you do not trade on the smaller time frames or something, or you're learning to trade. The first bar closed. This first bar is a strong bull close bar. Let's say there's basically an 80% chance that we will take the low and the high of the first bar, and a 20% chance that we might get a trend from the opening, leaving the low of the day. The first bar is the low of the day. This is pretty significant that we have gotten a close above these bars high, all of these VIX high on the 4 hours. Even if we might not close this gap, that will also be an indication that the gaps are leaving open, left open. So bulls are making money on the higher time frame. So the trend can continue. I am not generally interested in the long term short. My whole bias for the long term is towards the upside. So I'm trying to position my short term trades along with my long term bias. That will increase the probability, of course. But even if it starts to move down within the first, I will still take a short, hoping the gap is going to close. It all depends on how the second bar is going to form or the third bar is going to form. 15 minutes. We are gyrating around the weekly open. There are some key levels I'm going to mark now, and this is I'm taking a reference point of this specific price. Let me just 581. 581 is the reference point for the 4 hours 581 that started at right at 9 o'clock. 8:45. 581. In this blue, so the second bar has a big tail. We just demo. I trade the lower time frames, but I and switched to BTC as you advised me sometimes. Sometimes going, yes, I that was the thing I was thinking about. This is nice. Okay, for the, XRP, you can expect $5. If you're thinking in terms of quarterly candles, you can take your profit basically on the highest time frame. One times your risk will equal to $5. So $5 is a good target on the higher time frame. BTC is good since it's trending, so it's good. You have to be careful about volatility index of Bitcoin, BVOL. That will increase your probability. We are very, very close to the previous day high. That tells me that we might even take it. It's very close to it. We have gotten two gold bars. We are about to close above the weekly open. If we close above the weekly open, we might take out the news high. This candle is the news high. Eric, by the way, the setup I'm trading here has a very high probability. Win rate is a very high win rate for the scalps. You can also backtest this. Basically, I'm on the open, I'm trading this range, the initial range, and aiming for 50% of the range. 4 minutes left till the 15 minutes will close. But this setup only works on ES and NASDAQ. Third bar have 2 minutes to it. This potentially can make some sort of a wedge because we are in a trading range. So if it makes a wedge, I will be targeting this high and this high. It's more likely to break and close towards the upside now. The probability is high. We have taken out the previous day's high. If this bar closes as a pull bar, we'll have a 3 bar micro channel. Suppose the bulls who bought the close of the first bar, they will make 1 times their risk around this area. Okay. And their stop loss is right beneath this point. Bears do have not gotten a single chance to make money in the 3 bars now. A minute left. See how the bar can completely shift in the final seconds. So this is the final minute of the 15 minutes, and look what happened. And in a single candle, even in the 30 seconds, look what happened. See, now this is the trading range. Since this is a doji bar and we are in a lot of bulls got trapped. A lot of bulls got trapped right around this point. The bulls who bought the close of the second bar, where is their stop loss? Their stop loss is right around this point, and the bulls who bought the close of the first bar, their stop loss is right beneath this point, right? The bears who sold the previous day high, putting stop loss 1 standard deviation above this point, they are making money now. I am going to mark the first range as this color. If it breaks towards the downside, that has now more probability to close the gap and touch this point 581. So I'll be taking a short if it breaks towards the downside. Let's see how it performs now. 574 is key level, the moving average. Moving average. I can target the 575, 74.37. 574.37 is a key level. So this becomes relevant at this point. We close this gap. Let's say if the bulls get a chance to get out break even. Okay. Bulls, for example, bulls who bought expecting this as a range, their stop loss is right below this point. If they buy somewhat lower, their stop loss would be at right beneath this point. They'll buy lower around this point, so it can make some wedge on this time frame. Since this is the opening range gap, going to mark this as blue. Yesterday we tried to test this channel, which we are in from the start of the August till now, 10 days, and gapped up now. Overall, this can be a trading range, and I'm expecting this gap to close along with this 4 hours gap to close, along with this inefficiency and the open of the day. So we have a lot of confluences. We closed below the previous week open. That can be used as resistance point and short, short, short. This is the general idea. Let's see if the risk to reward favors this idea. Yeah, somewhat. I need closing. That would be the ideal case. I need closing 14 seconds. Without closing, it's not validated. Six. This is nice. The gap can be closed. The low of we have a lot of confluences. This blue line is the line of support. We have gotten to the moving average. If it makes some sort of a wedge and close within this range, I'll be more likely to get out of this, of the way of the trend. Because we are testing the moving average, this is the first test. But overall, I'm expecting some sort of a trading range. This black line should be used as resistance. Ideally, I know it's a negative risk to reward ratio, but it's a trading range, right? And this is not the real risk. Real risk is basically if we close above any of the prior bar high, I would be getting out of the nice. Okay. And my job is done. So basically, you're waiting for the 15 minutes. Usually watch live stream after it. You can make it when you're live. Basically, you are waiting for the 15 minutes to close at the US Open, then using a longer short to decide if the one mark closes. Yes, exactly. I am, matlab, at the core, this is what I am doing. And I'm being stupid and dumb. Not in the case, okay, this trade is not, the setup is not good. Stupid and dumb means I'm not overanalyzing a lot of things, right? I'm not biased. I'm not thinking about, okay, for example, okay, if it closes somewhere, or my bias was towards the upside in the long term, so I would not take a short. There are very, uh, because of my experience, I can do that. But generally, this is the setup. Basically, targeting 50% of the range and aiming for 50%. Since it's 1 to 1 risk to reward ratio, the probability is it 80 to 70%. Depends on your experience. Because, for example, maybe 2 or 3 days ago, there was a range and I was not trading it. That saved me a lot of money, right? You have to basically know when it's a trading range, when it's a trend. You have to profile the trading chart, then you can trade this. You have to mix some discretion. But initially, you have just these are the rules. These are the basic rules. Okay, we have, let's see if we came very close. You see, Eric, I am using these small, small things to add more probability. For example, I'm using this 20 period moving average. If we are above the 20 period moving average overall, and then I'm basically, even on a shorter time frame, on 5 minutes, right? I am trying to go always in long, always in long, always in short. These terminologies, some of it is Albrook's, some of it is my own. Uh, you see these lines, Asian highs, lows. Some of it is mine, some of it is Albrook's, and yeah, it all comes together to make a system. See how accurate the target was. We retested the open 50% of the gap. We retested this point. See how I was correct about it making some sort of a wedge, but I still took the trade. What I used to do earlier, that for example, if my mind is telling me as a predictive model, I project that we will bounce from this point. What I used to do, that I would not try to take this trade, because on the basis of assumption that it will go down first, then it will come back up. So I missed a lot of trades. Now what I do is, for example, I know it's gonna go down, then it's gonna go up. I can take a scalp, just get out early. So taking profits are where basically most of the problem is. And biggest reason this setup has a highest or the high win probability is because of certain fundamental reasons. The reason one is because of the open, there is basically an 80 or 90% chance that I can expect volatility. Majority of the days on the open, I can expect volatility. The next thing I am looking at is, you understand this concept which I talk about all the time, right? The close above, close above, close up, right? So I'm using that same close above, right? For example, it closed above the previous bar's high. It closed above the previous bar's high, right? Now there's basically 60%. I'm just being very conservative. 60% more likely to go up than it's gonna go down, right? So it's gonna go up. How much up? I can target 50% of this range. putting my stop loss at the 50%. So it gives me 1 to 1 risk to reward ratio. Not aiming for more than 1 to 1 is what makes it high probability. Right? Even when you are wrong about the direction, you can be right about the trade, because this is fundamentally how the price moves. It closed below a certain level. For example, even on a 1 minute, you can see higher time frames. This is the candle but is holding price. This candle, right? On A, this is 1 minute, right? We closed below, invalidating all of this. This is the new validation candle for the bears. You never got a closing above. Once it starts to move down below this point, I can it happens every bar, right? I can risk or the bull bears who sold the close of this bar, putting their stop loss above this point, they got 1 times their risk. Okay, for context now, we closed below the previous week's high. We tried to close above. Again, we tested that previous week's high. We tested this gap. We have a gap for the bears. We have not properly taken out the low of the news candle, which is 565. We come to the 15 minutes. See, this was the candle what was holding price, right? As it closed below this bar, it doesn't really add to the probability to go down, but it's still more likely to go down than up until it closed below above any of the bar, right? So from this point, the probability was high. I was waiting for this candle, the 930, to open or to close above any of the prior bar. Then I could have taken this fetch, expecting it to fall back, right? But it didn't. And it closed below any of the bars, it straight went down. Now we are testing if we can get a closing below the moving average. We have 1 minute and 25 seconds left. If we get a closing below the moving average, then I'll wait for 1 or 2 more bars to see if the price can sustain. But it's more likely that it would not sustain because this is a trading range and moving average doesn't really mean anything. Overall, we will just close the gap. Okay, so this setup is what really requires discipline and a trading window. My basic trading window is the first 2 hours of the day, but if I collect the data for the past 3 or 4 months, right, I am not on my charts or on my computer till the first hour is closed. So more often than not, this setup will present itself. It's either it's either like it's gonna happen, it's not gonna happen. And you have a defined trading window. That's the best thing about it. Just taking 1 to 1 and the job is done. That's all. One risk to reward. Even for example, today the risk to reward was skewed, but I am not trading my PNL, right? I was calculating the probability of this happening. So probability was high. So I took the trade. Okay, this is quite interesting. We closed below this bar. We closed below this bar. Now we are coming from for this low, which is 489, 487 to 489 is the next. We closed about below the this, which is the midnight open. Next bar is 487. See, I can talk about like you're going short, right? But I'm not trading it. I can read the price, but I'm not gonna trade it because my trading window is done. 487. 487 is the point, which is the point where the market is going to make a negative 487. We are retesting this channel again. Also, keeping my in mind this line represents 20 period moving average on the hourly time frame. We are going to, like, basically an 80% chance we are going to retest the 1 hour EMA. But even if the probability high, the risk to reward might not be there. So I'm not gonna trade it. And I'm not allowed to trade it basically because I've gotten the setup I wanted. See, we closed below the moving average. This is nice. Keep this in mind. The first of the hourly time frame, the hour on this electronic trading hours is closed. We are retesting the low of the prior hour. This is the high of the hour. This is the low of the hour. So minor cycles, I am expecting every hour to be like the open, if that makes sense. That the open first bar is not likely to be the high or the low of the candle. For example, the 4 hours opened and it makes some sort of this first bar. So it's not like gonna be the high. More likely, it's gonna be tested both ways. Right? So market will try to retest this point. One thing to keep in mind: we made a gap. We made a gap, a tiny gap here. Okay, bears who sold the close of this bar, their stop loss would be more likely to be above this point or one standard deviation above. Because assuming this is a trading range, it would have just gone half of this range, then come back down, right? Where will they try to get out? They will try to get out right around this point, right? Players who sold the close of the second bar, these two bear bars, strong bear bars, this is their target. Below hourly 20 period moving average and like between the previous day low and the moving average. Bulls who bought the close of the first bar, that was their stop. So a lot of things are going on within this opening range gap that makes us think that this is a trading range. Overall, statistically, this box becomes relevant and important. So I'm looking at this 20 period moving average and the 50% of this range. The gap, this is not a strong gap. Reason being, this is a bear bar, this is a bear bar, this is a bull bar, right? So this three bars are not bear bars. If three bars make up, like three bear bars make a gap that is more likely to be respected by the market and has more probability of it working out. Trying to retest the gap. Okay. Now we have a gap at 610. Okay, I think my so basically, so what price do you think BTC will bottom at the next? Eric, you remember I told you the bottom of BTC like last time. I exactly told everyone about the bottom. I hope you remember that. Coinbase. Was it Coinbase or I don't know? One day. This was the last time I said, "Okay, this is going to continue towards the upside." If you're talking about the bottom on the weekly time frame, that's completely different, and that's irrelevant as now. If you are talking about minor, okay, yeah, do you remember this D support? If you go back to 8 March live streams, I exactly told everyone that this is another bottom. You can go and watch even in the long term and go and look at my track record. I've been very right about these things. Okay, you remember this D support? This was the final bottom. This was the bear flag. So it will take some time. It will take some time for the approximate bottom. Approximate bottom is right around 100,000, 100,000, 100. Yeah, right around 100,000. 100,000. And if you go to the monthly time frame, for example, if some sort of a crash happens, then things will change. If you ask me about, for example, if I had $1 million, right, lying around, and I just want to be sure that if I throw money in Bitcoin, what is the price that is going to make me basically coming from me? I'm coming just coming from me, right? You know, in my track record, that point is 60,000. If the price comes to, I don't know how, on a weekly time frame I'm talking about, so you have to take reference of bigger ranges. If it comes to 60,000, 60,520 to be precise, and 45,000, from 50,000 to 45,000, let's just draw something 50,000, 60,000. I'm not saying the market will come here. I'm just giving you an approximate bottom as of now. It it will change, but still 60,000, 60,000 to 45,000. Since you trade or hold for the long term, right? This is more suitable. It's not gonna come here. I'm not saying this is gonna come here. If you, this is weekly bottom for reference. If I mark it here, if the price somehow comes to this point, I'll throw whatever the money I have. I'll sell my house to buy this Bitcoin at 60,000. Understand? Because these levels like worked every time. If you're talking about the short term trades for framing good risk to reward ratio, that's a different concept. That's completely different. This is for investing. Okay. So for short term investing, it changes rapidly. But still, there was a guy who asked me about the previous levels on this date. Yeah, then it's completed. So if I ask you, if I generally ask you, what is the difference between investing right around this point or investing right around this point. Okay, it's nice. Both have a risk to reward ratio, right? But probabilities will differ, and the lot size will also change according to the smaller time frames. So these are the levels I use for basically smaller time frames. You also know how I trade my criteria generally, right? I'll use the higher time frame for closing, then go to the smaller time frame. Right? We- This is contained within this price since it wicked, 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 wicked. As we move above this point, I'll try to buy it. This was another level. If it comes and try to move up or close above this point, right? I'll try to buy it, aiming for one times my risk, stop loss being at this point. So if I buy it right around here, I have to get out. It's gonna work, but I have to get out at some point, at some risk point. For example, if I'm trading very small and this is my stop order, so even if I forget these levels work. This is Bitcoin historical volatility index. You can just mark 1.20 and 0.53, these two levels. There's nothing more to this chart other than these two levels. And just go to the 4 hours time frame. This 4 hours. This chart is so simple. Even if we get a single close above the prior bar, that means the volatility increases anytime, every time, basically. VWAL. This candle told me that volatility is going to increase in some sense, and it will move above 120 every single time. This is a very thin chart, so it's easy to detect volatility on BTC. So when the volatility starts to increase, then you start to look for setups. If you're trading in terms of risk to reward or scalping, that makes it very high probability that your setup is going to work out. All right. Okay, we retested this gap 5 minutes, coming back to 5 minutes. We have retested this gap on the 15 minutes. We have retested this gap again on the 5 minutes. But since it closed above this bar, it makes us slightly more probable that it's going to go up other than down, because this is what's holding price towards downside. If you get a closing above this bar along with the this gap, then it makes higher probability. But overall, this is a trading range. Trading range. All right. Thank you. I'm going now. My job is done.